We're in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by John Cavanagh, the chairman and founder of Beat Capital. John, welcome.
Thank you. Good afternoon.
Good afternoon to you. So, John, we seem to be at that stage of the cycle where we'd expect a rash of new companies. Where are they all?
Well, we've seen this week an announcement of a couple of potential new ones from people that we all have a lot of respect for. So I guess it's encouraging to an extent that the broader financial markets are now seeing us as a bit of an opportunity, which I think we most certainly are. I don't think we've covered ourselves in glory from a results standpoint over the last 5 years. So, it's not surprising that there's not been a rush of capital to support a hard market that we're in that's always supported hard markets previously. So it's been an unusual outturn, but I sort of get it. And there's been a few false dawns over the last 4 or 5 years where the market was clearly improving. But every time it improved, we had adverse cat activity, or we had the Ukraine situation. Yeah, there were lots in COVID, obviously. So there've been lots of hurdles to get over in an environment that, on the face of it, looked like it was pretty good. So, on the assumption that we could well be through some of that, and actually, you look at the Lloyd's result for the first half of this year, and in fact last year, it looks like we're seeing very strong signs in the insurance and the reinsurance market that, we're making some good progress on turning in some decent results.
So you talk about the hard market, and you've touched on this a little bit, but tell us a little bit about how the industry has managed the hard market.
So, I think that we are very reactive sometimes, which I think is the very nature of what we do. We're in the business of severity, principally, and paying unusual claims, which is what we're all about, which is why people try and unload that type of exposure. So, by definition, we are always going to be reactive to circumstances that we haven't foreseen. I think climate change and the effects of climate change have somewhat caught us out, more by frequency of loss than severity, because we always prepare for severity. So I think in the round, we've been quite reactive. I think in some cases overreactive, particularly last January renewal period, where I think people were just overwhelmed by 5 years of bad results. And that created a huge amount of pushback. I think we're expecting a more orderly renewal season this year. Although, we're far from through the woods. And I think that it's going to be another tricky renewal season, as they always are, dependent on what the issues on the table are. It's going to be largely dependent on what happens between now and the end of the year in terms of severity loss. Obviously, we've just had an earthquake in Morocco, which in the grand scheme of things in insurance is not material really, but obviously from a human standpoint most certainly is, and we had the same situation in Turkey. So there's lots of frequency still going on that we need to respond to. But I think broadly speaking, we've done pretty well in terms of our response. Some would say not, but I feel that, we got through year end. Most of our clients got what they needed. I think the market got the price it needed. The market's moved itself away from a lot of the frequency losses that were causing the problems, but that's pushed it back to the original cedants, which is another problem to deal with. So it's the usual reinsurance merry-go-round, really.
The reinsurance merry-go-round, it's a nice way of putting it. So, to talk about those two recent losses that we've seen, where you say they're materially not material for the insurance industry, but that speaks to a bit of an insurance protection gap, it does. What's there more that the industry can do to perhaps fill that gap?
I don't know whether it's an insurance gap rather than, the insured interest there is very limited. I think a lot of people are uninsured there, which, is not, it is an industry problem in a sense, but it's only because people aren't buying at the level you'd expect to buy in somewhere like North America. I think we respond pretty well to, as economies expand, we provide product to those economies. It's a question of whether there's any demand in the first place. There are all sorts of other things we can do around government solutions to situations like that, using parametric products for earthquake, for example. So, and we've done that in many instances in other parts of the world. So there's lots of ways we can help. But obviously we need stimulus for that. We need to have a buyer that says we need to buy something to protect this and that. So I think when people do come to us, we tend to find a way of dealing with it.
Let's talk about Beat Capital in particular. Tell us a little bit about what you look for in a potential investment.
We are quite specific about what we seek, and the first thing is that we want to deal with people and work with people that culturally are in tune with us, which is really important. And as we know, the sort of type of behaviour in markets varies, but we have a certain type of behaviour that we like, and culturally it's important that people fit with the way we do things. We like to see a strong track record of performance. We like to see people that can articulate their upside, downside characteristics, how they price a risk, how they model their severity, how they model their systemic risk, how they can articulate the rates that they charge, how they manage cross-cycle underwriting, and generally speaking, how they position themselves in the market and how they're viewed in the market as, you know, bringing value to the table. So they're the key characteristics that we look for. And yeah, we've seen over 500 deals presented to us now, and we've done 12. So yeah, we're quite selective in what we do, and we're not going to compromise on that.
John, thank you very much indeed.
You're welcome.
For Invest TV, I'm Richard Banks.